Clay Patton on the Rural Radio Network as we take a check here, closing weekly commodity trade. Of course, joining us is Darrell Holaday, Country Futures, Frankfort, Kansas. Darrell, on Friday, if we could just pause the trade there and take the positives for what it is, good day for grains, good day for the hogs. Cattle slip a little bit, but really when you look at this week as a broader whole, the grains have really just taken a beating, especially as that May contract went into delivery. Overall, what do you make of it? Can we at least try to salvage some positivity on the trade this week?
Well, I think maybe the positivity would be how you described it. We probably exhausted some of the selling. I think when we got to the mid-morning on Friday, which was another down day to start the first half of the session, especially on the corn side, we got down to levels, for example, 572 on the July corn that were just, that represents some good commercial value even domestically. We still, I guess I've kind of said this week that maybe the brand on the side of the corn and bean markets this week, if you were branding them, you would say you'd have a big B on it. It would be Brazil, because they just continue to make big offers on the world market on both beans and corn, well below the U.S. And ironically, as it came to the week's end, it really hadn't changed much. A little bit. It's a little firmer basis on the beans, not so much in the corn. But ironically, Argentina, which has got this terrible corn crop, drought and everything, and they're offering it. Brazil's at 50 cents under the U.S. offers, and Argentina's 85 under. But they need hard currency. I mean, there's lots of things that come into a market like that, or come into play in a market like that, and they need hard currency so bad their peso's worthless, so they need actual other hard currency to try to pay international debt. It's a good example of a socialist country that is just a mess, absolute mess, and that even affects the overall market to some extent. But as you said, very weak, under a lot of pressure all week. China canceled almost 600,000 tons of U.S. corn they'd purchased. Some concerns they might actually cancel some more. Once again, all this because the Brazilian offers are significantly low what they paid for U.S. corn, and so they cancel that and go and buy Brazil. I think there's another 1 million tons that are certainly vulnerable to that occurring, because China's probably bought about 1 million tons that's listed under unknown, and wouldn't be surprised if that gets moved gets canceled in the whole scope of things. Canadian wheat acres pressured the wheat market. We're looking at a total wheat acres number well over 27 million. Once again, if their weather straightens out and warms up a little bit, which actually it does indicate it's going, we're going to see that. Those acres would be in there. That's a big number. I mean, it certainly sets the stage for a record crop in Canada. You certainly would have the acres to do it. We certainly don't have the weather to do it. And then you throw in the good rain we saw in the central southern parts of the U.S., the plains areas of the driest areas that we've had. Now we'll concentrate on the areas in north central Kansas, northwest Kansas, up into Nebraska, and they're certainly there. But we took the driest areas, and you certainly gave them a good dose of moisture. Even had another round. We had a couple rounds of it midweek and a round late on Friday. We just south central Kansas, southwest Kansas, West Texas, western Oklahoma. Those would be those are the ones that benefited the most that were so dry. And again, it isn't going to save the wheat crop, but it would certainly provide some support to a crop that's certainly not zero, I would say, at this point in time. And then you get down further south where the crop probably is somewhat gone. It would certainly allow an opportunity to put some feed in the ground, and that would have some impact on the cattle market as a whole. But again, did come off the lows and exhausted that selling. I think got to levels we said commercial value. And I think you look at the uncertainties you have of the U.S. crop as you go through the year. We'll have planting uncertainty. We'll have weather uncertainties as we go through. I think it captures the weakness this week. Kind of tells you, hey, the economy's kind of slow, the world economy's slow, and we got a lot of competition in the market, and it's pushed us lower. So I certainly would anticipate some bounce because of the uncertainties we move forward, and maybe these lows that we put in this week are going to be very critical. You take them out, it could get a lot worse, but certainly did show some strength at the close on Friday. May corn on the week down 27 at 636. New crop December down 20 at 528. So again, off the lows of the week. May soybeans down 39, 1444. November beans down 22, 1263. May Kansas City wheat down 34 at 807, and the new crop July down 49 at 776. June crude oil down $1.09 at 76.78 on the close on Friday. Cash-fed cattle trade in the South was basically $2 lower. Basically, 173 ended up being the trade as a whole, basically down about $4 in the north, ranging anywhere from 177 to 183. So then some narrowing of that spread. But futures basically ended up slightly higher. Feeders went to new highs and then came off and were a little lower on the day on Friday, but still were higher on the week. Once again, the rain in the south somewhat impactful for the overall outlook. As you continue, if that whole weather pattern has changed, it would certainly take some pressure off of the market, the cattle that need to move into the feedlots or even additional liquidation. Did see the pork products seem to get better this week after we got a cold storage report that certainly showed why we'd had so much trouble in April. We had very large pork supplies in the inventories at March 31, well above a year ago. But we did. I think maybe we spent the month of April clearing that out. The cash index should start to move higher next week as we see this improvement in the cutout as it got over 80 on Friday for the first time in a long time. And we did see a very strong weekly export sales report on the hogs, or on the pork, I should say, at 54,000 tons that came out on Thursday. So that pushed the futures higher. Once again, they're probably way out in front of the index a little further than they feel comfortable as we came to the week's end, but the market will probably we'll have to correct at some point, but we did show some life in those markets, and you can certainly see that index jump in a hurry if we start to see this product get better. Both the cattle and the hogs struggle a little bit with the first quarter CPI, indicating that just the first quarter growth in the United States at 1.1%, well below expectations, or I guess some expectations. The Fed is now dealing squarely with a stagflation type of environment where you're going to probably see unemployment continue to move up. You're going to see inflation stay high, and at the same time, you're seeing stagnant growth. And this is the first look at the first quarter. There'll be 2 or 3 more reads on it. Wouldn't be surprised that moves very down below 1% before that number is done, and that is not positive, and certainly in the whole big picture would not be positive for the pork and beef. Doesn't mean that we're still being driven by supply side, but would be negative from a demand standpoint. We'll see whether the Fed makes a move as we get into May. That most anticipation is they would still go a quarter higher, but they are really faced with a problem with still seeing banks in trouble because of this move they've made, and also obviously the economy is starting to struggle. And maybe they'll look at that GDP number as somewhat negative enough that they may slow their increase in interest rates. April cattle on the week up 120 at 175.17. They went off the board at noon on Friday at that price level. June cattle up 95, 165.47. August 22 higher at 163.77. May feeders 210.97, down 143. The August feeder contract though up 85 at 238.82. June hogs 91.70, up 5.63 on the week, and the August hogs 4.72 higher, closing at 94.67.
And that's Darrell Holaday, Country Futures, Frankfort, Kansas. You can always learn more at countryfutures.com. Do remember, trade futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.